Hey everyone, it's Russell here, and this morning Tiff Macklem, the governor of the Bank of Canada, held a press conference in which he revealed a whole bunch of different thoughts on different topics that could be important to you. First, he talked about what he thinks the real reason is for the huge wealth inequality that's growing here in Canada. He also talks about some things that may make you believe that they're actually more aligned with the Liberal government's policy than you may previously have thought, as well as his thoughts on the inflation rates that came out in the US just yesterday. Pretty high inflation rates, and that caused a little bit of a mini stock market crash. So he provides some thoughts on that. Is he concerned about it? As well as how the Bank of Canada is begging people to go back to work, and that's so important for Canada right now, as well as some comments that may make you believe that the Bank of Canada actually believes there's not all that much that's wrong with the Canadian housing market right now, even though we're seeing record prices. And of course, at the end, we're going to break it down a little bit to find out how you might be able to make some money using some of the information that was actually laid out here by Tiff Macklem. The first thing we're going to talk about here is the Bank of Canada's Quantitative Easing program. Now, Tiff Macklem's speech today, well, it was split up into two different sections. The first was sort of a speech that was given to certain university students, but right after he held a media availability, and inside of that, that's where some of the more hard-hitting questions were. But first, inside of his speech, he actually talks about the views that the Quantitative Easing program, essentially the Bank of Canada printing anywhere between $3 to $5 billion per week in new money into the Canadian system, well, he talks about how this could have some negative impacts on some Canadians, even though it is achieving the goals that he's set out to actually achieve with this program. Let's listen in on what he has to say.
We are also looking at how the monetary policy tools we've deployed, including quantitative easing, or QE as we call it, are affecting inequality. Of course, changes in monetary policy always have consequences for both income and wealth. Similar to reducing interest rates, QE works to stimulate demand by lowering borrowing costs and encouraging spending. This supports job creation. And it's clear that the single biggest contributor to reducing income inequality is making sure people have jobs. At the same time, our policy interest rates in QE also affect the prices of assets, and not just government bonds. QE can boost wealth by increasing the value of assets, such as the investments Canadians have in their RSPs or in their company pension plan. But of course, we know these assets aren't distributed evenly across society. And as a result, QE can widen wealth inequality. We will be looking closely at the outcome of QE here in Canada and elsewhere, and we're going to work to more fully understand its impact on both income and wealth inequality.
So some interesting statements from our guy Tiff here at the Bank of Canada. He's essentially saying, well, we're doing this quantitative easing program, printing all of this money and lowering interest rates, and that's having some effects that are different for different people. He's saying the people who have invested in things, he said, in RRSPs and TFSAs and pensions, well, they've been doing well because it's boosted asset prices, but there have been some people who haven't done as well because they are not invested in these assets. But he says, hey, that's okay, because also with our quantitative easing program, we're creating more jobs. We're supporting businesses so that they can hire more people. And it seems like he's saying here that that's what's really important for this wealth gap. It's not teaching people who aren't investing right now to start investing and get along for the ride with all the wealthy Canadians. No, it's more about getting the employment numbers up, because at least the Bank of Canada and Tiff Macklem here believe that's the real problem. It is interesting, however, that when he mentions, hey, asset prices are rising, he mentions RRSPs and pensions, but he doesn't mention one of the largest impacted sectors by this quantitative easing program, and that's housing. A reporter a little bit later is going to ask a question as to why he didn't even include this in this list of things that are impacted by this money printing system. But first, actually a student from the first press conference asks quite an astute question. He says, hey, what does the Bank of Canada think of what the Liberal government is doing with their budget? If you haven't been following the channel, the Liberals have essentially said, hey, we're okay to spend a whole bunch of money as long as our debt to GDP ratio stays at the current levels that we're currently at. Now, some critics think that if we adhere to this sort of metric for thinking about how much the government can spend, well, then it's just going to lead to increasing amounts of spending over time, because if we increase government revenues, we can increase more spending. Now, let's listen in on what Tiff Macklem has to say about using this metric over some other metrics when it comes to the government spending.
That fiscal stimulus has substantially increased our debt level, but our debt level remains low relative to our G7 counterparts. Our credit rating remains very strong. And if you look at the recent federal budget, what you can see is that it continues to go up a bit, but the debt to GDP ratio levels off and then begins to come down slightly. So, this fiscal policy has been very necessary, and there is a plan to stabilize the debt to GDP ratio.
It's really interesting comparing and contrasting what Tiff Macklem here is saying to what Chrystia Freeland, the finance minister, is saying. Essentially, it seems like they're both sort of buying into this idea that as long as we keep our debt to GDP ratio solid and we have a plan to lower that over time, well then we shouldn't really be worried about the increase in government spending. Now, some people will point to this saying, hey, isn't the government and the Bank of Canada, aren't they supposed to be totally independent and not have any sort of back and forth in terms of the way that they implement their policy? Well, the Bank of Canada will say, yeah, we still are doing that, but many critics are going to point out here, hey, it kind of looks like the Bank of Canada and the Canadian government are sort of working together a little bit here, especially given the fact that now Tiff Macklem and the Bank of Canada, well, they're printing $3 billion each month, and the Canadian government is, over the next year, if this budget passes, going to be spending, essentially, and borrowing, essentially, $3 billion per week. Yeah, so they're printing $3 billion per week, and the government is using $3 billion a week. Certain critics are going to say, hey, they're kind of working together here. And of course, Tiff Macklem had to talk a little bit about what's going on in the stock market right now. It's been a super volatile time. It was all based on the inflation data that came out just a couple days ago, actually, from the US. Now, let me show you this stat because it's interesting right here. They're saying that Wednesday's latest CPI data from the United States showing inflation rose to 4.2% instead of the expected, though already high, 3.6%, only added to the apprehension. So this is not even to mention all of the crash right now. Well, crash is a relative term, but in cryptocurrency after Elon Musk and Tesla came out in lack of support for Bitcoin because of the environmental reasons, it seems like all this stuff is happening at the same time. But a reporter asked the question, hey, Tiff, are you worried about this inflation data? Do you think that this is going to be long-term? What does it mean for investors in the stock market? What are your thoughts on this? Let's listen to what he had to say.
We expect to see inflation over the next couple of months go up to the top of our 1 to 3 band. So, something 3-ish. And that largely reflects, as you mentioned, these base year effects. A year ago, economic activity was plunging. A number of prices, gasoline, accommodation fell very sharply. And the inflation's measured at the 12-month rate of change. So a year later, we're seeing some big run-ups in those prices. That'll be a temporary effect. We've also seen higher gas prices, higher commodity prices. That will push inflation up a bit.
So much like the Federal Reserve in the States, the Bank of Canada here in Canada isn't all that worried about inflation, saying that, well, we're still going to be within our band of 1 to 3% that we're targeting. And he also believes that the higher inflation that we're likely to see over the next coming months, well, that's not going to be around for the long term in his eyes, because these numbers are sort of measured in year-over-year data. And when he talked about this in his speech, he actually mentioned, hey, well, we're looking at April to April data. What happened in April of last year? Well, the stock market and the economy in general just sort of went off of a cliff because nobody knew what was going to happen when it comes to the way that the COVID pandemic was going to sort of evolve. Now we're comparing data from that April to this April, right? So obviously when there was extremely low levels of inflation last year, and now we have a little bit higher inflation, well, the change, the percentage rate and change year over year, it's going to look a little high. But Tiff here and also Jerome Powell at the Federal Reserve, he thinks it's just short term and that we're not going to see this continue long term. Of course, anecdotally, a lot of people saying, how could there not be inflation? Look at housing prices, look at lumber, look at the rising cost of living in many cities across North America. That's for you to think about a little bit more and decide, what do you really think is going on here? Then Tiff gets questioned on something that he didn't mention earlier in his speech, and that is real estate, something that the Bank of Canada has really been under scrutiny for as of late. They're essentially saying, hey, aren't the wealthy getting wealthier because they're able to invest in things like stocks and real estate? Also something we talk about in the Canada Money Mastery program. You can get 45% off with coupon code INVEST. Check out the link in the description if you're interested in it. But let's listen in on what Tiff Macklem here has to say about housing, and it might surprise you because it seems like he doesn't think it's as big a problem as some people are making it out to be.
There is certainly some evidence that One of the ways quantitative easing works is it raises asset values, and that benefits Canadians, RRSPs, their pension plans, but wealth isn't distributed equally in society, so it can benefit wealthy Canadians more than other Canadians. But I want to emphasize, the biggest effect of quantitative easing is it it stimulates spending and gets people back to work, and that is the most important thing you can do to reduce inequality. Get people, get people back to work, getting the income you get from a job. That's the most important thing you can do to reduce inequality.
So before he gets into housing here, he reiterates that, yeah, well, our quantitative easing program is boosting up the wealth of already wealthy Canadians who are invested. That's one of the effects of quantitative easing. But then he re-emphasizes that, saying, hey, everybody needs to get back to work. That's what's going to solve our wealth inequality problem. Now, some critics might see some problems here, saying, hey, how is this really going to change the wealth gap that we're seeing here in Canada if people go back to their $15 an hour jobs and they're not able to make ends meet and save more and invest more, right? This is what's really going to help people get out of that poverty sort of area and boost themselves into a wealthier future, right? That's what we like to talk about here on the channel. Investing as much as you possibly can, saving as much as you possibly can, so you can funnel that into investments. Well, Tiff here doesn't really believe that that's something that people need to do. They just need to get back to work and start getting the wages that they were getting before this pandemic started. But then he says something interesting about housing.
It is clearly a factor that low interest rates are part of what we're seeing in housing. There's no question about that. That's partly how monetary policy works. A large part of this housing boom is very fundamentally driven. More than 5 million Canadians are working at home, and Canadians want more space. With this very sudden shift in demand, supply is having trouble keeping up, and there's no question low interest rates are making borrowing more affordable, and so that is part of it. We've got to look at the needs of the whole economy. Large parts of the economy remain very weak. The economy needs our support to support the recovery and get us back to potential output and inflation on target.
So he's saying, yes, through our quantitative easing program, we're pushing down interest rates, and that's allowing a lot more people to borrow a lot more and qualify for a lot more. But at the same time, he says that's not the real reason we're seeing these real estate prices increase. Instead, it's more of a supply and demand thing. He's saying there's so much more demand for Canadians to have more space, but at the same time, the supply hasn't really kept up with that. So that might lead you to believe that the Bank of Canada isn't all that worried about the way their money printing program is having an effect on the Canadian real estate market. And it doesn't seem like this quantitative easing is going to stop anytime soon, at least based on these statements here. He's saying we're going to support the Canadian economy all the way through. We can't take away this stimulus that we're giving it through the quantitative easing program until we have employment higher, right? We need Canadians to get back to work. Get back to work. That's how they're going to solve the wealth problem, the wealth gap problem. But so it seems like that they're not going to actually change anything when it comes to the effects that this quantitative easing program is having on housing. But now, of course, we need to talk about how this can affect you, especially if you're somebody who's investing right now. Well, certainly yesterday we saw a huge dip in the stock market, again, largely tied to the inflation data that came out of the States. Now, if you believe Tiff Macklem, what he's saying here in his analysis, as well as what Jerome Powell from the Federal Reserve has been saying, well, you'd believe that, hey, this inflation, these high numbers, this is only for the short term. We don't need to be worried. So if you're buying into that sort of narrative as well as their analysis, well, it would make sense right now to buy into this current stock market, because the precursor to the dip, right, the higher inflation numbers, well, that's not going to be there forever. And once we see that, oh, inflation isn't as bad as we thought it was going to be, this is what Tiff Macklem's saying, well, likely those stocks that have suffered since that inflation data came out, well, they could see a bounce back. This also has an effect if you're looking to buy a primary residence or a rental property right now, right? It seems like the Bank of Canada isn't really considering doing too much with its quantitative easing program, largely affecting interest rates. You'll know that the interest rates on lending for mortgages, well, that's one of the biggest indicators of where the housing market's going, right? Typically, if we see a 1% increase in interest rates on mortgages, well, we see a 10% decrease in housing prices on aggregate, right, across the country. So that's something to consider right now. It seems like they're not too eager to raise their interest rates, even though based on some data from some recent articles, many Canadians would be in support of raising interest rates to slow the current housing boom. For me right now, I'm currently buying more stocks and more cryptocurrency because of this recent dip. I believe long-term, through my investing strategy, I like to hold everything long-term, only long-term plays. I'm sort of taking this as a buying opportunity, right? We're seeing a little bit of a discount when it comes to these different stocks and these different cryptocurrencies. So that's what my strategy is right now, buying a little bit more every single day, dollar cost averaging into the market. Again, things that we talk about in the Canada Money Mastery program, link down in the description, 45% off with the coupon code INVEST. We have a whole bunch of people in there all talking about this stuff and looking to learn more about how to set themselves up for a more stable financial future. So if you're interested in it, make sure to check that out down there in the description. And I'm curious, what do you think about all of this? What do you think about what Tiff Macklem had to say here? What are you personally investing in right now? Let me know down in the comments. I read every single one and try to reply to as many as I can, so I'd be really interested in hearing your take there. And with all that said, thank you so much for watching, everybody. I really hope this video helped you out at least a little bit, and I'll see you next time.
This channel is supported by viewers like you. Thanks, channel members.